Hi, and welcome to the Money Show. Today I have Dr. Kerry Given with Parkwood Capital, who is both a gopher and a gator, which is a story that maybe we'll get into at some point. Dr. Given is the author of two books. One is The No Hype Options Trading, and the other is Time is Money. So your moniker or your nickname is Dr. Duke.
Yeah, I happened to be born the same day as Prince Charles. And my dad thought that was cool, so he called me Duke. And so all through my corporate career, I was Kerry, and people at home and friends called me Duke. So,
and there you have it. There's the story behind Dr. Duke. Yeah. So, non-directional trading?
That's the idea there is, normally we think of directional trading. I'm bullish on Apple, so I buy a call or I buy the stock, whatever. Or I'm bearish and I short the stock. Could be a variety of trades. But normally you're trading directionally, you're predicting. When you trade non-directionally, what you do is you put on a trade, like for example, I could sell a spread up above the current price, sell a spread down below the current price. And then as long as the stock or index stays in between there, I can just play it day by day. And what I do is I adjust my position based on what the market does today, as opposed to predicting what it's going to do tomorrow.
So you're selling risk on both sides, basically.
That's right.
In the belief that you're just going to stay in a channel right in the middle.
Right.
Okay.
Because as time goes on, each of those options is losing value.
Okay. All right.
So that's sense. What you're banking on. You're banking on being able to buy them back at some point for less and bank your profit.
You know, I'm an equities guy. Our research and analysis is all very fundamental based. So options is not really, my thing, but what I've always heard is that sellers are the folks who make the most money in options.
Yeah, part of that is a misnomer, because what they base that on, if you go to somebody like the Chicago Board Options Exchange, they will publish quarterly how many options are expired, how many were exercised, sold, and so forth. And generally speaking, on a typical quarter, only about 10% of options actually go into expiration with some value.
Okay.
A large percentage expire worthless, but then a larger number, like 60%, actually are exercised or closed before they ever get to expiration. So it's not as large a number that expire worthless as people think.
Okay.
But generally speaking, it is easier, at least in my opinion, to sell the option and then just let it decay. Because if you're on the other side of that, for example, if I go way out of the money and buy a call, it maybe doesn't cost very much, but I'm waiting on that stock to move. I need it to move because my option is decaying in value. If it doesn't move, I'm not making money. Whereas if you're on the other side of that, you're thinking, I don't care if it's moving or not because I'm benefiting from time. So there is an advantage.
Okay. Now, you're an educator.
Yeah.
You teach people how to trade.
That's right.
Okay. Your reputation is as solid and no hype.
That's right.
You teach the real deal. Okay, so as someone who teaches investing, what's the most difficult thing for you to get investors to learn or to understand?
I would say one of the things, I always talk to anybody who's going to take a coaching class before they ever sign up. And I end up turning away a lot of people simply because they have unrealistic expectations. And I just kind of say, you're not going to be happy with me, and kind of let it go at that. Because unfortunately, there's a lot of hype out there, hence the title of my book.
Right.
That kind of encourages people to think, I can take my $5,000 account, trade options, and suddenly it'll be $500,000.
Of course, yeah, it's a lotto ticket.
Yeah.
I know. In my presentations, I tell people all the time that investing is a business.
Exactly.
You need to think about it as a business.
Exactly.
It's not a lotto ticket. It's not Las Vegas. You're not rolling and saying, baby needs new shoes, give me a 7, okay? Because if you were going to go buy a business on Main Street and run it and operate it, you would want to know, number one, how am I going to get paid?
Right.
Where's my return on investment?
Exactly.
Okay. Do you find that it's hard to get people to change the way they think?
Oh yeah, in fact, your analogy with a business is a very good one. I often tell people if I have a business, I have the electric bill, I have various expenses, and I'll have them regardless of what I sell. And it's the same thing in trading, you're gonna have losses. And
Sure.
the trick is that you've got to manage your losses and manage your winners so that you end up net to the positive. And oftentimes people just they can't accept that. Now part of the reason is psychological. If you think about it, those of us that have capital to trade have it because we were successful doing something. And typically you aren't successful in most careers by being 70% right.
Correct.
And yet in trading you can make money being 70% right. And so some of my students come in and they're used to being a 95, 99% person, always did it right, stayed up all night if they had to, whatever, and they got it right. Well, in trading, they suddenly find that I did all my homework, but it didn't work. It just happens.
I have 3 sons and they all play baseball. And, you know, if you can hit 300,
Right,
you know, you have a career,
that's right.
okay? If you own a business and you're batting 300, you've got an issue.
That's right.
So,
That's exactly right.
all right.
In fact, the class that I did this morning, I was emphasizing the type of trading with options where you're really doing very conservative trading, and I called it the Pete Rose style of trading.
Oh, okay.
Where you just try and get on base, make your 1 or 2%, move on. You don't try to get it out of the park.
4,300 singles and doubles, I think, something like that.
Oh, it's something huge. It's amazing.
It's a ridiculous number, I know. So, so here we are, Dr. Kerry Given.